All right. Hello and welcome, Debra Casper. Debra is a financial counselor at Clearwater Credit Union. And thanks for joining me today, Debra. Could you tell us a little bit about your background and how you ended up as a financial counselor?
Sure. So it's a little bit of a long story, but the vision for my position started when I was a young teenager. My father had a very good paying job when he suddenly passed away. My mother was a stay-at-home mom. Our income suddenly dropped dramatically. All that we had was Social Security survivors benefits to live on. I was 13 years old and suddenly took on the family finances. As a 13-year-old, I really did not know what I was doing. I did know how to write checks and balance a checkbook, but I had no idea how to prioritize payments. The idea of a rainy day fund was a totally foreign concept to me. Once I used all funds to pay bills and put some food on the table, I'd let other family members know that there were no funds left to spend and to cease all of their activity. However, that never happened. They would let me know the next day that they withdrew funds for a fundraiser or a craft or some other miscellaneous thing. Always with the explanation that they didn't know I really meant that we were out of money. So soon checks would start overdrafting the account. We'd end up with fees and checks being returned, and it just became an endless cycle. And I didn't know how to stop it. There was a point that I decided that whatever I did in my life, I wanted to be able to teach others how to avoid going through what I went through. I had no idea that a position such as a financial counselor even existed. I thought I wanted to be an accountant, as it was the closest thing I could imagine to being a way to help others navigate nuances of money. It didn't take long in my education to determine that that wasn't really what I was looking for. In frustration, I took what jobs came my way. I did eventually take a position in the loan department at Clearwater, then known as Missoula Federal Credit Union. I worked my way up to being an indirect loan officer. I loved my job and I was good at it, but there came a point that I knew I needed a change. One of the senior vice presidents mentioned that she was looking into adding a position for financial counselor to the staff. She discussed a little bit about what that entailed, excuse me, and I knew right away that was what I wanted. I sent her a letter of interest the next day. I didn't hear anything more about it for over a year. I decided that they chose to go a different route. Then one day I was called up and was told that they were sending me to school for the position and asked if I wanted to start with the winter course or the spring course. So I packed my bags and flew to Tempe, Arizona and started my certification course. I became certified March of 2007. I started out doing counseling part-time alongside my lending. And I was just feeling like I was getting my feet under me when they had the big housing crash and recession in 2008. Then in 2009, they made the position officially a full-time position. I recertify every 3 years. In August of 2021, I received my master trainer certification for credit as an asset through Credit Builders Alliance. And that allows me to teach credit report courses for both mentors and consumers.
Wow. Yeah, that's really powerful to hear about, what you went through as a 13-year-old. That's a lot of responsibility to take on like that. Yeah. But I'm glad you've been able to find a way to help people. Kind of what does your job sort of look like on a daily basis? What do you get to help people do?
So I typically start out doing a budget analysis with members and pulling a credit report to get an idea what they have to work with and where their problems really lie. Is it a problem with not having enough funds? Is it an overspending problem? Is it really a credit problem that we need to address credit issues? And that's where I get started. A typical initial appointment with me lasts for about 2 hours.
Wow.
So
All
pretty
right.
time
Yeah,
consuming.
I bet. Yeah. And so I guess for our audience, if anyone doesn't have any idea what a credit score is, could you explain in basic terms what a credit score is?
So, well, we often say credit score is what we really should be saying is, or credit score, what we really should be saying is credit scores, because there are many, many scores out there. A credit score is basically a summary of your credit report that has been turned into a 3-digit number designed to illustrate for lenders and businesses the risk level of a consumer. A credit score could be probably most associated with like a GPA. So it's a 3-digit number to help creditors determine what the risk level is when they do business with a
Right.
particular person. So
Cool. And how are credit scores usually calculated?
there are many different credit scoring models and model generations. There's really too many to count. They all use their own algorithm. So your score is calculated in relation to others who have similar credit profiles. So when you first start to build credit, you're compared with others just starting out. As your profile changes, you'll automatically transition between scorecards in different groups of consumers. FICO in general looks at 35% of your score being from pay history, 30% of the score being from accounts owed, 15% from length of credit history, 10% for both a mix of credit and new credit. And Vantage score, on the other hand, does not have a percentage that they use, but goes by weight.
Interesting. And what are credit scores typically used for? I know we can talk about credit scores being used for like loans and things, but sometimes they're used for things outside of that. Can you give any examples of those?
So there are risk factors used by businesses to determine how risky it will be to do business with a particular consumer. So it's used for not only loans, but insurance companies use them. In some cases, it can be used for getting rental. It can be used for getting utilities, that type of thing.
Right. All right. So I guess in your experience at Clearwater Credit Union and before that, Missoula Federal Credit Union, when someone kind of wants to apply for a loan, is the credit score the only thing they look at, or do you consider any other factors?
So credit score on its own is not going to determine whether you qualify for a loan.
Oh, really? All right.
So we also will look at your debt ratio. We'll look at character. Part of that's determined on if you have done business with us before and what that business looked like. That being said, we do use credit scores to determine rates. And so we are required to always use that rate. So it doesn't matter if you are a high risk with your rate, but you've always been a great risk to us, we have to give you the high risk rate. We cannot discriminate from one consumer to another. If you're rate based, you always have to go by the rates or by the scores, regardless of how you've been with us otherwise.
And in your opinion, is that generally a fair process? Do you think credit scores are used fairly in the loan application process?
I think that we in Montana are a little different than, say, if you are in a big metropolis.
Really? How so?
So I think that we don't have the divisions that you see in big metropolises. People are all more intermixed. So in some cases, I do think zip code that you live in can be a factor. Here, not so much. We have high income, low income people all kind of living in the same zip codes. So I don't feel that it's looked at the same here as it could be other places.
Interesting. Yeah, that's really interesting to know. And do you know if in bigger cities, do they use those zip codes then? Does that ever
So
have to do with-
technically they can't use a zip code,
Right.
but I do believe that there is some discrimination used there.
Okay. That's unfortunate.
It is.
Yeah. I guess, how do you typically advise someone to improve their credit score if someone comes to you and they don't have a good score? What do you tell them to do?
So it's always going to be on an individual basis. I really do have to look at their credit report to make any determinations. In some cases, they might need to pay some debt. In some cases, they may need more available credit lines, such as credit cards. Maybe they have credit cards, but the balances are too high on, or they have too many cards. In some cases, such as bankruptcy or collections, we can look at ways to start rebuilding credit, but it's really going to take time to go over some of the negative impact. Their credit issues could derive from a combination of those things also. So in determining how to overcome the challenges, I also have to take into consideration their capacity to work through them and what their goals are and how our plan to fix their credit issues is going to affect those goals.
And in your experience, how does having a good credit score or a bad credit score affect someone's life?
So there's lasting impacts to poor credit. If the product that you are using is costing you more money than others, that's money that you can't save for emergencies or retirement. If you have debt, the debt's going to be a burden longer. If your interest rate's higher, the sooner a person can improve their credit, the sooner they'll be able to overcome those negative consequences of the credit score.
Yeah. And in the research we've done for this, we've seen that credit scores can be used outside the credit system, as you mentioned, in hiring and in housing and sometimes for insurance. Can you think of any examples where a client's credit score affected their ability to find a job or housing or car insurance?
So credit scores cannot be used for hiring purposes, but credit reports can. So,
credit reports.
So they would look at the report as a whole to make that determination, but they aren't allowed to get scores.
Oh, interesting.
So it really shouldn't be an issue. The score itself shouldn't be an issue with finding a job. And it's especially used, the credit report's especially used if the employer needs to check for bondability if you're in a position such as a financial institution. So what's on that credit report could prevent you from getting a job.
Mm-hmm.
I haven't had any members that actually couldn't find housing due to their credit score. I have had some that had to put up extra deposit funds and some that were not able to get into preferred housing, but we always found a way to get them into some type of housing. But credit scores do definitely play a part with where you can live and what the overall cost of where you're going to live is going to be.
Yeah.
And then most insurance companies use credit scores. The scores help determine what your premiums are going to be. I have seen times when the premiums have been too high to be sustainable. And in those cases, I have members shop for insurance companies that don't use scores. There are a few out there. They're getting harder and harder to find, but there are a few out there still.
Oh, interesting. Well, that's good to know that there's some alternatives, at least for people in these areas. Yeah, and another issue we were researching is that the ability to build credit scores can vary on demographic factors. For instance, the US Consumer Financial Protection Bureau has found that consumers in low-income neighborhoods are more likely to be credit invisible, where they don't have a credit history and a credit company won't have any files on them. And there's typically more credit invisible people in these lower income neighborhoods than in higher income neighborhoods. Have you had any experience dealing with people who have been credit invisible? And if so, do you think there's any ways that the credit scoring system could be more equitable?
So again, I don't feel that we see the impact of the low neighborhoods that you see in the larger metropolises, but certainly there are those with lower incomes that have a harder time building credit, as they likely don't have the assets to help them with establishing credit. People that fit in that demographic also have a potential to have collections or other derogatory marks on their credit, as again, they don't have assets to get them through some of those emergencies or other life events that happen. Our native population can be unscored if they've been doing all of their borrowing through a tribal financial institution. Most tribal financial institutions don't report to credit bureaus. So we at Clearwater do have some credit building products to help members of all walks of life. There's also what's called rent reporting that people can sign up for, and consumer permissioned data are also ways that consumers can show the ability to make payments. Those are not used by all lenders or all scoring models at this time, however, so they do need to be aware of that. But yeah, I would definitely be talking to your financial institution. I think more and more financial institutions are aware of the need to have credit building products.
Right.
So
those credit building products you mentioned, is that like rent scoring or rent reporting? Is there any other ways that you think people could find a way to establish credit?
So like rent reporting isn't actually a product of ours. So for our products, we actually have some like first time borrower products. We have some share secured products, which is basically you put money up in a savings account and borrow from yourself to start building. We do have a credit builder loan in which you take out a loan and the funds are put into a savings account for those that don't have the ability to save to start with. And then they pay that back, and then they've got a nice little savings account when they're done paying it off. So they've got a cushion to get them through other things. Sometimes it's a matter too of having some type of collateral. So if you're buying a car, for instance, if the car isn't really overextending you, and if you can have a down payment on that car or be in a good collateral position, we can always take a look at doing a car loan that way too.
Very cool. So those are, yeah, that's exciting to hear that there are some possibilities that are being used to help people who are credit invisible. It's good to hear. And I guess over the course of your career, have you noticed any trends in the ways credit scores are used opposed to how they were in the past? And has this whole system changed in any way, especially with these new like alternative products you've mentioned? Is that a new trend?
So we've had the share secured loans as long as I've been here, which has been 28 years now. But some of the other credit building products are newer. Yeah, so as far as seeing changes, when we first started using credit scores, they were more for informational purposes than actually giving somebody a rate based on a score. Um, we initially used a score model called Beacon. And we didn't lend based on that score at all. It just gave us an indicator to look for possible issues that we might have otherwise missed while we were going through the credit report. But we didn't do any kind of risk-based lending at the time. We no longer use that scoring model. We now use a FICO scoring model, which we have for many years now. The last several years, we've switched to more of a risk-based lending, which with that risk-based lending, we're now able to lend to some members that we previously were not able to. It's at a higher score than the lower risk members, but there's ability to get those loans, which otherwise they might have to turn to some alternative lending situations that are very costly. So
yeah, that beacon system you mentioned, how was that different? What kind of went into that score?
And honestly, that was so long ago, and I know that there's still Beacon out there for some situations, and I tried to do some research on it, and I just have not been able to find anything on it because it's so limited. I shouldn't say that I don't know who does it. I think that it is possibly an Equifax product, but I'm not 100% sure on that.
Oh, interesting. Do you think over these changes, do you think the credit scoring system has become more equitable or less equitable, or no difference?
So when we talk about the credit scoring system, it also continues to change over time. There's new scoring generations coming out all the time. Newest models would be FICO 10, FICO 10T, and Vantage Score 4.0. Some of the more recent scoring models allow for rent reporting and alternative data to be factored into the score. FICO developed what they call a resilience index and introduced it in 2020 in response to the pandemic. So the resilience index helps lenders identify which consumers are likely to be more resilient during an unexpected economic disruption. Due to the pandemic, flexible coding options have been implemented for lenders that have loans that have been put on forbearance. So that also can, I suppose it can be both helpful and not so helpful in a way, depending on how the creditor looks at it. But it explains why a loan might be in forbearance rather than they just couldn't pay. We know now that it was a forbearance issue that a lender's taken into consideration. So
Yeah, that's really interesting. I didn't know that the pandemic had already had an impact on this whole system. It's kind of fascinating. Yeah, definitely some, really illustrated having the importance of having a rainy day fund, and I bet all of the interactions you had with your clients. Did you have any, I guess, for you as a financial advisor, was there an increase in people coming to you during the pandemic?
There actually wasn't, and I really think a lot of it has been that people have been afraid. Some of them not wanting to come and see me because they're wanting to shelter. During most of, for 16 months of it, I actually was working from home. So they couldn't come and see me anyway. And some people are very intimidated by video conferences, but they also weren't comfortable with doing things over the phone. So, so I did run into some of that. I also ran into people who said, I did have a mess, but all of these stimulus packages have really helped me work my own way out of it. So if they had the resources, that's great. I was always here to talk to them if they had questions about how best to make those stimulus payments work for them. But some of them just wanted to work it on their own. And I think it makes them feel good when they know that they can do that. So more power to them.
Yeah, that's great. And kind of an interesting trend. I wouldn't have known that. Yeah.
Yeah, it was
And what,
interesting times.
yes, for sure. Yes. And kind of a last question for you is that since you have experience with the American credit scoring system, we'd like to ask your opinion about systems used in other countries. So in some countries like Spain, the Netherlands, and Brazil, there's a national credit blacklist, but if someone's not on the blacklist, they're just all treated the same. And consumers usually establish a relationship with a bank, and their interactions over time are used to judge credit worthiness. But other countries like France and Japan have no national credit score, and consumers usually just work with individual banks. What are your thoughts on systems like these, and what do you think the pros and cons might be?
I honestly have no experience with any systems other than those used in the United States, so it's really hard to have an opinion on a system that you don't fully understand how it works. So yeah, I don't know that I know the pros and cons. I'm sure that they are many going both ways. I mean,
Yeah,
right? Everything's got a for every negative or every positive, there's an equal reaction, right?
right. Yeah,
I do know that a lot of people that move from one country to another have a difficult time with establishing credit, as there's no record that follows them. There's, there's ways, the credit building and things that we can do to help them out. If an American goes to another country, I have no idea how they get established or how that looks. So yeah, I really don't have a good answer for you.
that's all right. Do you think, just in your opinion, what do you think would be different? Like if the United States today were to just say no more credit scores, it's all just going to be up to you walking into a bank and, you know, each bank can just decide how they want to do things. What do you think would change?
I think that you would have to have a pretty good relationship with any institution that you went to get any kind of financial products.
Right. Yeah. Kind of would change a
So
lot.
it could be really difficult to get started with it.
Yeah, for sure. And there's also some countries that go kind of the other extreme. There's China has a social credit rating system where they sort of monitor everyone's social media data, their phone data, they kind of track people's interactions on the street and every bit of financial stuff. And that's kind of all encapsulated into this score that lets people just go to college or leave the country or things like that. And some people say it's more fair because you have more data so you can actually understand what people are doing, but some people say it's kind of a violation of privacy. Do you have any opinion on that? Do you think the US should do more data collection or less?
And I have to agree with that. I think that it's probably a violation of privacy. I also, thinking of my own personal situation, I may post a lot of things. I rarely ever put a comment as to why I'm posting something. And sometimes it's because I want to draw people's attention to it that, hey, this is bad. And other times I want to say, hey, this is good. But I don't put an explanation on there. I leave it for people to make up their own mind. So if a financial institution were to go in and look at my Facebook page, it could be really confusing to them, and they wouldn't know what way I was leaning, or I really don't think that it is a really good way to understand somebody's financial life. That's for sure.
Yeah. So you think that do you think there's a line between information financial institutions should have access to and information they shouldn't?
Yeah, so I really do feel that the information that a financial institution should be able to access is going to be information that actually affects that financial institution. So it's got to be finance. There's got to be some financial basis to it, or some verifying that you're truly who you say you are. So we know that you're not stealing somebody's identity.
Yeah,
So
a lot of cybersecurity implications there as well. And I actually just interviewed a professor in Belgium who was working on a system where he was able to study call data, and he was able to figure out that based on who people call and their calling networks, that you could predict someone's credit score based on the people they interact with. So if you interact with more people who don't have a good credit score, you're more likely to not have one yourself. Do you have any opinion about that system? Would you be willing to be enrolled in something like that, or are there any issues you might see with it?
So again, I think that it could be very biased. I could see that's a possibility. I also could see that there are people that may have a relationship with somebody based on, I have some of my members that I work with. Some of them have wanted to friend me, and as long as it's okay with them, I'm good with that. But my finances probably don't match theirs at all.
Right.
But for the most part, I could see that a lot of the people that people interact with are going to be kind of in the same mindset. But that isn't always going to be true.
Yeah. And I mean, if you call people in your family and your family comes from like a lower income background, you might just be kind of, do you think there's a possibility you could get kind of trapped in a situation if you're just happen to call people in your family or something like that?
Yeah.
Yeah.
Not all family members are going to be the same. You hear the term, the apple doesn't fall far from the tree, but I don't think that's always fair either. So
yeah, fascinating. Well, I think that's everything I have for you today. And it was really great to talk with you, Deborah. I really appreciate your time.
Nice talking with you, and good luck on this research you're doing.
All right. Thank you.
Thank you.